November's oil market, a calm before the storm, or a sign of stability? The oil market is holding its breath after a lackluster November, a stark contrast to the geopolitical tensions and price volatility of the past. With a $3 per barrel trading range, ICE Brent's subdued performance raises questions about the industry's direction. But here's the twist: this calm might be the eye of the storm, setting the stage for a pivotal December. 2026 predictions, a slippery slope? Analysts and economists are revising their 2026 oil price forecasts, with a consensus forming around $62 per barrel, a significant drop from earlier predictions. But is this a realistic expectation? The International Energy Agency's, IEA, projection of a 4.2 million barrels per day oversupply is extreme, but even conservative estimates suggest a stock buildup. U.S. shale output is expected to decline in 2026, with WTI prices potentially averaging $59 per barrel. This could provide a price floor, but the impact on the global market remains uncertain. Freight costs have kept Atlantic Basin oil from flooding the Asian market, but with the Brent-Dubai EFS spread turning negative, this barrier may soon be lifted. Market movers, a game of strategies. Chevron, NYSE, CVX, is expanding its footprint in Nigeria's deepwater, farming into 2 blocks operated by Total Energies, NYSE, TTE. Targa Resources, NYSE, TRGP, boosts its gas processing capabilities with a $1.25 billion acquisition of stakeholder Midstream. BP, NYSE, BP, resumes its Olympic pipeline operations after a leak-induced halt. ExxonMobil, NYSE, Exxon, is in talks with Iraq to purchase Lukoil's stake in the West Kurna 2 oil field, a surprising move after its recent divestment in the adjacent West Kurna 1. Barrick Mining, NYSE, B, considers an IPO for its North American gold assets, a strategic shift influenced by activist investor Elliott Investment Management. December's diplomatic dance, a game changer? As OPEC Plus rolls over December quotas, the focus shifts to the Witkoff-led diplomatic efforts between Russia and Ukraine. This shuttle diplomacy could be the wildcard that reshapes the oil market's trajectory in December. But will it be enough to offset the oversupply concerns and demand slack? Natural gas, a bullish outlook. U.S. natural gas futures are soaring, reaching a 35-month high at $4.90 per MMBtu. Record feed gas demand in November and colder forecasts contribute to this bullish trend. But is this surge sustainable, or will it fizzle like the geopolitical bets of the past month? Copper's rise, a response to supply constraints. China's copper prices hit an all-time high after CSPT, a major smelter, announced production cuts. This move highlights the market's sensitivity to supply disruptions and the potential for further price volatility. A month of uncertainties and opportunities. The Caspian Pipeline Consortium resumes operations after a drone attack, but at half capacity. The UK withdraws support for a key African LNG project, citing security risks and shifting priorities. Gunvor's co-founder retires amidst US allegations, triggering a leadership transition. Senegal battles an oil leak from a tanker, allegedly attacked by Ukraine-orchestrated drones. Elliott Investment Management secures Citgo Petroleum, concluding a lengthy auction process. Venezuela's Maduro accuses the U.S. of targeting the country's oil reserves, appealing to OPEC for support. Taiwan increases LNG usage, marking a shift in its energy mix. Ukraine's drone strikes on tankers in the Black Sea drive up insurance rates. Canada delays its decision on the TMX asset sale, awaiting full pipeline utilization. China encourages domestic iron ore mining to reduce import dependence. As December unfolds, the oil market awaits its next catalyst. Will it be diplomatic breakthroughs, supply disruptions, or shifting geopolitical tides? The stage is set for a high-stakes month, where every move could impact the industry's future. Stay tuned as the story unfolds, and feel free to share your thoughts on these developments and their potential implications.